Hello, and welcome to another update video about AVAX. On the AVAX chart, you might recall it from previous videos. We're tracking a corrective rally. Okay, so first of all, what does that mean? It means we could still go higher in the short term, but it also means that the movement to the upside is likely going to be extremely choppy and messy and overlapping. That's precisely what we see right now from the April low. So-called corrective rally from an Elliott wave point of view is simply labeled as an ABC structure. And you can see that here in blue on the chart. Yeah, the rally from the swing low that formed here on the 7th of April is currently classed as A, B, C pattern. So the A wave might still be unfolding. And if the A wave turns into a 5-wave move, which it can do still, especially as long as we are holding above the $17.53 level, there are certain guidelines for each of the subwaves in the structure. And the 61.8 retracement at $17.53 is a typical, let's say, limit. You could say a limit. Price shouldn't break below that in a fourth wave. Yeah, but maybe that fourth wave in the A wave is already completed. Quick reminder, an A wave can be a 5-wave pattern. It can also be 3 waves, but for now, we're watching for 5 waves because 5-wave movements give us decent setups. So if we get 5 waves up, then we can add support for the B wave. At the moment, I only have wave 4 support on the chart. Okay, because if we break below it, it would likely then be the B wave. And the B wave can go a little bit lower. It's just important to be able to understand where are we at the moment in this structure, and we haven't got 5 waves up yet. Therefore, the wave 4 support remains relevant. Okay, because it could be tested again. That's possible. That could be tested again. That support area, and we can still try higher. Okay. But either way, what we're tracking for is a corrective rally labeled wave 2 with standard resistance starting at $25. Then we also have $29.13 and $33.91 as next Fibonacci resistances, retracements, and above that level even $42. Only above $42, especially if the market breaks in 5 waves above 42, the yellow scenario becomes more probable. I mean, there is just nothing really impulsive from the low. Therefore, the blue scenario is currently preferred. Not that I like it more, but it just seems to be the more probable scenario. Now, I'm happy to change my view if the market shows us evidence that the bulls are taking the lead, really. I mean, in the short term, I am watching for higher prices. And if it becomes more than just an ABC rally, as shown here in blue, maybe a 5-wave move, and we break above $42, I mean, yeah, I'll be the first to say, look, it's likely going to turn into an impulse or something. And then we can just adjust the support levels accordingly, right? In the short term, a bullish and even the bullish yellow, yeah, and the more bearish blue scenario, they are actually moving together in the short term. So we don't at the moment need to distinguish between them. Don't think we actually can distinguish anyway. There's no way of telling which one is it, okay? Because the yellow count would move higher, and even the blue count should also still move higher. Yeah, so it's very important to recognize. That's why a first 5-wave move up would actually be a decent setup. And then we can watch for the corrective pullback, which would be the B wave. What does corrective pullback means? It means we have a 3-wave move down, forming a higher low, and then from there we could go higher. I will add support for the B wave once we have a top in place in wave A. Yeah, that's just a quick update about AVAX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.